Good morning, everybody. Thank you for joining. I'm Shaun Bartle, Tax Advisory Manager at Finch and Associates. We're a specialist tax advisory firm that assists clients in submitting R&D tax credit claims and creative industry relief tax credit claims. This is the subject of our seminar today, and really it's about how you as a business, if you're innovating within your field, can save on corporation tax and potentially get a nice cash injection for the business, which, given everything that's going on at the moment, is probably more vital now than ever before. So the R&D Tax Credit scheme is a government incentive to reward businesses that are pushing the boundaries of innovation within their field. It's a corporation tax relief, whereby it's an expenditure-driven relief that you're claiming on expenditure incurred in your projects that can qualify for R&D. I think it's very important at this stage that I make you aware that there's actually two reliefs available. There's the SME scheme and the RDEC scheme, which is aimed at larger companies. Now, most of our claims and most claims across the country fall within the SME scheme, and it is more generous. I'll just give you an overview of how it works. So to qualify for the SME scheme, you have to look at your group consolidated numbers. Now, if you have under 500 employees, gross turnover of 100 million euros and gross assets of 86 million euros and under, then you can qualify for the SME relief. Now, I must note that this assumes that you haven't already received a government grant or subsidy of any kind. If you have, it doesn't mean that you can't claim R&D. It just makes things a little bit more complicated in terms of which area you fall under. And we can come on to that later. But broadly speaking, the SME scheme is the most applicable to UK companies. To be eligible for an R&D tax credit claim, you have to be a UK limited company. And really, we're looking for two key things to ensure that you qualify. The first thing that we're looking for is that you are seeking an advance in science or technology within your field. Now, what we mean by that is that you are either creating or enhancing an existing product or service. And the second key thing that we're looking for is that while seeking point one, that advanced sort, is that you encounter technological or scientific uncertainty. Now, to put that in simple English, it means that the expert within your company on this particular project cannot just find the answer on Google, for instance. They have to go through iterations of trial and error, back to the drawing board, building prototypes, and basically it's causing them headaches. That's what we're really looking for, is what caused people the most headaches and why. If you can just get the answer on Google, or the expert can speak to someone else within that field to get the answer, it's not likely to qualify because you're not pushing the boundaries of innovation. That's just simple. Now, one of the questions that I get asked all the time is, how do I know if I qualify? Does my industry qualify? One point to really emphasize here is that there's no limit in terms of what industries can qualify. It really boils down to the work that you're doing. So as an example, we have clients that are based in aerospace. We've got clients that are based in the waste, energy and recycling industry, the software development. It's a real broad spectrum, even down to architectures, which is not your obvious in-your-face R&D. So you have to take it on a case-by-case basis. And there really is no limit as to what can qualify. As long as you're hitting the two key criteria that I mentioned earlier, then it's certainly worth a discussion to find out if the project qualifies. So let's talk about the qualifying expenditure and how the relief actually works in reality. So the first thing is, it's an expenditure-driven claim. So in terms of revenue, etc., we're not going to be focused on that. The areas that qualify for R&D tax relief are staff costs, which includes gross salaries, employers' national insurance contributions, and employers' pension contributions, subcontractors and externally provided workers, i.e. agency staff. Now, essentially, the way this works is that not everyone has the in-house expertise to carry on with the project. They may have to go and get someone to come in and work on a particular part, and it wouldn't be fair if you couldn't claim that expenditure at all. So what we're looking at here is anyone who come in and worked on the project to help you resolve the technological uncertainties or scientific uncertainties faced, that were seeking that advanced sort at the start of the project. Now, it's worth mentioning that there is a statutory restriction in place. So as an example, if you brought in a subcontractor and you paid them £10,000, the maximum that you could claim under the R&D scheme is 6,500, i.e. there's a 65% restriction. And the reason for that is simply the subcontractor is not going to invoice you at cost. They're going to want to make a bit of profit on top of that. So essentially HMRC is saying you can't have your cake and eat it. So other areas that qualify can be consumables, which are wholly used and transformed during the R&D project. So what I mean by this, as an example, is one of our clients in the waste and recycling industry was working on how to extract certain plastics from the landfill and ultimately reuse them. Whereas beforehand, this type of plastic had never been recycled. So what would happen is this particular client would buy in large quantities of this plastic from landfill sites and would use it up in the trial and error because they were trying to see how they could extract it and then transform it going forward so that it could be used again. Now, once the project's resolved, you can't claim the expenditure, i.e. once the product is sold on. What we're looking to claim is the bits that were used up during the project that are no longer usable after. So as well as the other costs mentioned, we can also claim software costs. Now, this will obviously depend on the type of project you've been working on. And it's worth noting that general subscription costs, such as Adobe, are not qualifying expenditure. Whenever we're thinking about costs and whether they qualify, we always have to link it back to the two key points that I mentioned at the start of this talk. That being the advance that you are seeking in science or technology and the uncertainties faced. So all of the costs that we're discussing have to be linked back to these two key areas, okay? Now, another area that can qualify is medical costs in regards to clinical trials. This is a very rare area and it doesn't come up that often, but it's certainly worth noting for those that are in this space. So to recap the qualifying expenditure that we're looking for, it's staff costs, it's subcontractors and agency staff that have been brought in to work on the projects, it's any consumables that have been wholly used and transformed during the project, could be software costs, excluding subscriptions, depending on the type of project you've been working on. Now, your tax advisor will obviously help you through this process and identify these areas just through a simple discussion with yourselves as to what these costs relate to, how it ties in with the project, and to obviously ensure that you're meeting the two criteria that we're going to keep coming back to, which is the advanced sort and the uncertainties faced. So now that we've established what costs qualify for the R&D tax relief, you're probably thinking, what's next? How do the numbers fit together? So what we have to do is you take your total qualifying expenditure that's been identified, and the R&D relief essentially gives this what I call a steroid injection, which I appreciate may sound a bit unusual in a tax speech, but you'll see what I mean. As an example, let's say you've identified £100,000 of qualifying R&D expenditure. Under the relief, the R&D scheme gives this cost an additional 130% uplift. So even though you've only spent £100,000 for your books, you get an additional cost of £130,000 to put through. Now, again, I know that may sound strange, but the economics behind it are that if you're increasing your cost base, you're decreasing your profit and therefore decreasing any tax due. You get the corporation tax relief on this enhanced expenditure, which is the 130% uplift that I've mentioned. So once we've established the enhanced expenditure produced by the claim, we then have to look at how this is going to affect the tax position. So for companies that are pre-R&D or in a profit-making position, there's two potential outcomes. Firstly, they're going to get a repayment of any corporation tax paid, and then, depending on the amount of the claim, it could pull them into a loss-making position post-R&D. If this happens, then you have a couple of options. The loss that's generated can be carried back against the prior accounting profits, if applicable. Also, under CT rules, it can be carried forward to offset against future trading profits, or what's unique about the R&D tax credit scheme is that you essentially surrender that loss now, i.e. you give it back to HMRC, and you receive a tax credit now. Now, there is a slight discrepancy between the benefits of this. So if you carry back or forward, it's at the corporation tax rate of 19%. However, the tax credit is at 14.5%. But the way to look at this is that the economics behind it are that you're surrendering for a lower rate, but you're getting cash now, as opposed to relieving that benefit in 12, 18 months' time. So depending on the individual company circumstances, it's all about how vital would that cash be. Now, given everything that's going on in the current climate, cash is more relevant now than ever before. It's really going to help keep companies afloat, as well as investing in the business and furthering the R&D that they're undertaking. So to summarize the R&D tax credit scheme benefit, for profit-making companies, essentially you can recoup up to 25p in every pound spent on qualifying R&D expenditure. For loss-making companies, you can recoup up to 33p in every pound that is spent on qualifying R&D expenditure. Now, some companies and some claims, you do get a mixture of the two, depending on the pre and post R&D position. But this really is on a case-by-case basis and has to be looked at each year in isolation. Sometimes it's best to talk about R&D in terms of case studies so that people can understand that it's applicable to many different areas. So as I mentioned earlier, as long as you hit the two key criteria that we keep coming back to, there really is no limit in terms of the type of industry that you work in. As an example, you have emerging technologies such as blockchain, artificial intelligence, virtual reality that are becoming more mainstream, and more companies are spending money in these areas. Now, that doesn't mean that you have to go and create one of these areas by yourself. For instance, we have a recycling company that was looking at innovating within this field by integrating blockchain technology into their day-to-day business. Now, the idea of this was that they would track the plastic that they were getting from the landfills all the way through to the end consumer. Now, this hadn't been done before and was completely unique to this type of industry. However, we have another client that had done something similar with gold. And again, they was using the blockchain technology to track the gold from the beginning, where it was sourced from, all the way through the mining process, all the way through to where it was bought by the end consumer. So as you can see, you've got two companies that are using a similar technology and integrating it into their business to improve the way that they're working and also to track things better. Now, both very similar projects, but in completely different industries, and both were able to claim R&D tax credits. Now, there's two case studies that I wanted to raise and bring to your attention because it really illustrates that there is no limit to the types of industries that R&D tax credits can apply to. So the first is a company who hosts a particular festival each year. Now, their R&D tax credit was based on health and safety legislation and how they could construct the tents in the fields that would comply with these regulations. Now, it wasn't simply just putting a tent up and hoping for the best. They had to take into account the number of people that were allowed within a certain proximity of each other. They had to take into account the health and safety regulations in terms of the staging area and how all of this would fit together so that they could actually meet the specification that they wanted. Now, there's not many areas where you would say tents would qualify as R&D. So this really illustrates that there is no boundaries. Now, the second one that I wanted to mention is architecture. So our client had a particular variety of clients that would need very specific drawings built so that they could construct their building. Now, the issue was that they would want a particular piece of material to be used in the building that hadn't been used before in this particular area. And what I mean by that is that what would be typical in perhaps a timber frame building wouldn't be the same as a stone-based. And they had to work out how they could get everything to fit together, not only on the drawings, but actually in reality when it comes to building it. Now, this was a very interesting one because as we got talking to the client, we then established that more and more of the projects that they'd worked on actually met the criteria for R&D. And all of a sudden, rather than just talking about 2 projects, we ended up talking about 5 or 6 projects that qualified during this period, which was fantastic news for the client because it meant that their claim was going to be a lot bigger. Another case study that I would like to talk to you about is in regards to special effects. So this client would be hired by various firms to create special effects. So, for instance, it could be on a TV show. Now, what the client would initially have to do is work out, in essence, what their client was looking for, what was already in the public domain in terms of how to achieve this type of thing, and then go away and essentially blow stuff up on a field to see how they could get the special effect, such as a particular type of fire. Now, it's all very well that they've gone and been able to do it on a field, but where the real R&D came into it is how they could go and reenact this in a particular setting, i.e. on stage or in a filming studio. Because all of a sudden you're going to have a lot of health and safety regulations. There's going to be a lot more risk in terms of someone getting hurt or something going wrong. So the R&D really came into it in terms of how can they take it from an open space into essentially a closed space and still get the same effect that was desired by the client. Something that's worth noting is inquiries, as this comes up a lot. Now, unfortunately, as with anything that's good, there are people that will take advantage of it. And because the R&D tax credit scheme is so advantageous in terms of cash flow and getting that cash injection now, there are firms and companies that have taken advantage of it. What that has resulted in is HMRC clamping down on any spurious claims that have been submitted. So there are a lot more checks going on in terms of HMRC looking through the claims to try and find any fraudulent claims. However, it's the job of a tax advisory firm, such as Finch and Associates, to ensure that nothing like this happens. It's our job to really sit there with the client and understand exactly what is happening, how it relates to the R&D scheme, and to ensure that all the tick boxes are being ticked correctly. If that happens, then there should be no issue in terms of an inquiry. If an inquiry does happen, then it should be able to be resolved fairly quickly because the tax advisor should have taken the necessary steps to ensure that all of the legislation has been met. As an example, we recently had a client whose claim was inquired by HMRC. Now, we did expect this to happen because it was the first two claims for the company, and the company had only been established for 2 years. And this was a £1.5 million tax credit. So by no means necessary, it wasn't any small change. This was a large sum, and we therefore expected HMRC to have some questions. Now, the process for inquiries can be quite daunting for both the client and the tax advisor. With this particular scenario, we received a 6-page document from HMRC, and they just wanted to really drill down a bit further into the detail. It wasn't that the report that was submitted was incorrect or not efficient or containing the wrong information. It was merely a matter that HMRC were looking at it and saying, okay, this company has just been established and yet we have a huge 7-figure claim. They just wanted to be sure that before they hand that sort of sum of money over, that everything was as it should be. Now, on average, inquiries can take several months to resolve, which is quite a tedious process for everyone involved. However, in this particular circumstance, we were able to get this resolved within a month, which really demonstrates that we established the R&D that had happened and illustrated this within the project report that was submitted to HMRC, which was great news for us and especially great news for the client because it meant that they could receive that sum of money now, and that was actually reinvested straight into the business, and it has furthered the growth of the company in terms of the R&D projects they're undertaking. They've actually used these funds to go on and fund 2 further R&D projects, which are being claimed in the current R&D period for that company. So as you can see, the economics of the R&D are great because they get the cash now, that goes into the business, it allows them to hire the right people to do the right job, to move the R&D projects forward. And in this particular case, it's an alternative energy company, which is great because it means that people are being employed by this company and this company is working towards a greener environment. There's the social benefits to it, as well as the economic, which is fantastic for everyone involved. So that's R&D wrapped up. This does link with the creative industry tax reliefs, of which there are several. As an example, you have video games tax relief, animation tax relief, 3D animation tax relief, film tax credits, and several others. Now, it's kind of self-explanatory in the name as to what industries these relate to. So, As an example, video games tax relief is focused on the creation of UK-based video games, and there are strict criteria with all of these reliefs. Essentially, it is focused around the BFI certificate, which is the British Film Institute certificate. Without this, it essentially means a company is not eligible to claim. And the process for this is fairly simple in terms of a basic questionnaire for the company to fill out, send off, and if it's approved, then they've established themselves with the BFI certificate, and it means that they'll be eligible to make these claims. Now, it's worth noting that a company can claim one of these creative industry tax reliefs, such as video games tax, as well as R&D. However, you cannot claim the same expenditure on both. Now, as we discussed earlier, the typical benefit for an R&D tax credit claim is up to 25p or 33p in every pound spent. Now, with the creative industry tax reliefs, we're looking at a 25% tax benefit for the company. It's a lot simpler than the R&D in terms of how the benefits have arisen. And again, it's a cost-driven, expenditure-related claim. So the areas that qualify are similar to R&D in terms of time and people spent on the project. Now, as I mentioned, you can't claim the same expenditure on both. So as an example, we have a client that we have done the R&D claim and the video game tax relief claim for. Now, in this particular scenario, it was more beneficial for the client to claim R&D on one of the projects than on both. And that's because the expenditure related to it was completely separate. It was broken down into two projects. And the advantage of using a firm such as Finch and Associates rather than just a consultancy firm is that they can look at the overall tax picture to establish whether it's better to use R&D, video games tax, or a mixture of the two. And it also means that you only have to deal with one advisor. So thank you for joining me today. I hope you've enjoyed the talk. And if you have any questions, we have a bit of time left at the end for a Q&A session. So any queries or questions you have, please feel free to drop it in the box and I will get back to you. If not, my contact details are as follows, and they should come up on the screen now. Appreciate that. Thank you and take care. Bye.